going to record.
Okay. Okay. Great.
Ritesh, start it. Kindly speak on. Yes, sir. Webinar started.
We'll wait for a moment. So good evening, participants. SEPC is back with yet another class for the master series. This time the topic is very specific. It's about the Forex management issues. And I think this topic is very crucial to every exporter, right from merchandise to services. And we have Myforex, which is a financial who will be taking up this session. He's also an ex-banker, Mr. Arvind Tandon, who formalized this company. And they will be dealing with TPO issues, Forex management, trade finances, trading wealth management, and other issues related to all B2B, B2C compliances and how to handle the market transparently. Today's speaker is somebody very important. He's a co-founder and country head of Myforex Fintech Private Limited, which is a Forex market veteran with more than 20 years of long experience in Forex market, derivatives, and technical analysis. So I welcome Mr. Ritesh Victor to our masterclass series. He has a wide-ranging experience as the head of Forex and Treasury, Forex risk management consultant, technical analyst, and as a research manager. Prior to this, he has worked with the Trident Group. He is the keynote speaker with many other associations and exporting-importing industries, as well as chambers of commerce, FIO, FICCI, PCH, etc. An avid student of Forex markets and technical analysis of currencies, he has authored numerous technical reports, Forex training modules, and risk management presentation. He has also worked extensively on backtesting, asset allocation, optimization of technical indicators. We are just running a minute late. Sorry for some technical glitches, and I welcome Mr. Ritesh Victor formally. And I hope that all the services exporters gain out of it, and all their queries are answered totally to the possible capacity of the time limit we have for him. He has already said the time is very short for him. So let's begin this session as soon as possible. Over to Mr. Victor. And after his presentation, he's going to answer all your questions. Be ready for that. Okay, you can put that in chat box, or you can ask them directly. You can raise your hand. Over to you, Mr. Victor.
Okay, thank you, Mrs. Tu. Thank you so much. It's an honor and a privilege to be here and to discuss and share ideas about Forex markets and how to manage Forex risk. It's a great privilege. So should I put my presentation on? Would I share the screen?
Please kindly start. Let's begin it.
Yeah, sure. Okay, so everyone can see my screen?
Kindly make it full screen.
Yeah. Okay, so everyone can see, right? Okay. So a warm welcome to each and every one of you. Good afternoon. It is great being here to share ideas and knowledge about Forex markets. That is what we have done for the last 20-21 years. So one by one, let me run through what are the evolving trends in Forex markets in India now, and how the volatility impacts, and how do we ensure that the volatility is not against us and we are not negatively impacted. Okay, so these are the broad agenda points that I want to cover today. One of the most critical things that we have noticed in companies in India, both exporters as well as importers, is how do I manage Forex rates? Okay, there is a huge lack of transparency about Forex rates in India. So I will tell you how to manage it and how to make very effective savings as far as Forex rates are concerned. A very second point is about, a lot of exporters, probably I've met about 10, 11,000 companies in India across the length and breadth of the country. What I've seen, majority of exporters is, they have a very misguided conclusion that I should not take a forward or I should not take a hedge. Because if I take a forward or a hedge, the dollar is always on an uptrend. 3 years back it was 65, 68. Now it is 75. So dollar is always on an uptrend. So I should not take a forward. I do not have any risk. So I will share facts and figures of how that is a misguided conclusion and what you should actually optimize your risk management using forward contracts. The third point I want to talk about is how to optimize on your interest cost. Since you are exporters, there are various funding options available from your banks, from the banking system. So how do I optimize the interest cost on my export funding? The fourth question is something which everyone, I probably answer this question 10, 15 times a day. Everyone asks me, whoever I meet, any company that I meet, the first question they ask me is dollar ka kya lag raha hai? Is it going to 72 or is it going to 78? Dollar ka kya lag raha hai? Aapko kaise hedge karna chahiye? So that is one question that I will try and answer to you. And then also I would want to give you a few slides and points on our mobile application and how a lot of forex challenges in India are met and solved by our mobile application. And towards the end, obviously, I'll take questions from you. So questions, you can put it on the chat box, or you can directly call and ask on this forum. I am more than happy to answer all your questions. Okay, so let us start one by one. There's someone. Okay, so people are telling me to increase the volume. Is it clear now?
Yeah, kindly speak little loudly. I have sent you the message for the same.
Okay. So is it better now? Is it audible now?
Yes, sir, it's better now.
Okay, great. So let us come to the subject one by one. Okay, how do I manage forex rates? Okay, now in every forex transaction, understand what is the kind of transaction, because managing forex rates, the first thing that you need to look at is what is the kind of transaction that I am doing. 90% of forex transactions in India is that I want to convert today and I want to get a credit today itself. Okay, so when I want to do that, everyone understand that there is a spot rate. When I want to get a conversion today, you do not get a spot rate. You get a combination of spot minus a component called cash spot. Okay, so spot rate is used for any transaction where you are fixing the rate today and you are getting a debit or credit in your account 2 days later. Okay, so understand what is the type of the transaction that you have. Okay, so if I want to get a credit today, it is called a cash rate. And how do I get a cash rate? Cash rate is a simple spot rate minus a component called cash spot. So there is an adjustment that happens to the spot rate, and spot rate is what is quoted in the market, and that is what is traded in the market. So spot rate is the benchmark, cash rate is derived from the spot rate. Okay, now if you want to do any forward, if you want to do a forward which is a settlement beyond the spot rate, then you get something called a forward premium as well. So you get spot plus forward premium for any maturity or any settlement beyond the spot rate. So for understanding what is the rate that I need to get, and for managing the rates, I will take 2-3 slides more. But first thing that you need to understand is what is the transaction that I'm doing. Am I doing a cash transaction where I want the settlement to happen today, or am I doing a spot transaction where I want to have the settlement day after tomorrow? Now, one question is, what is TOM? I'll explain what is TOM. See, if I trade today and get the debit or credit today, then cash rate is taken. Okay. If I trade today and take a debit or credit T+2 or 2 working days later, that is called spot rate. But if I want to take a credit tomorrow, that is called a TOM rate. So TOM is a simple short form of tomorrow. Okay, so I'll simply summarize. Trade today, credit today is cash rate. Trade today, credit tomorrow is TOM rate. Trade today and credit day after tomorrow or 2 working days later is called spot rate. And everything is derived from this spot rate. Spot rate is the benchmark, and cash rate, TOM rate, everything is derived from the spot rate. You know, my next slide, if you look at this, if you look at this slide, this will tell you how it functions. Okay, so if I have a cash transaction, then I'll have a spot rate minus the cash spot, and obviously minus the bank margin. I'm talking about all exporters. Now, what is a bank margin? Bank margin is the compensation that you pay to your bank for all forex conversions. Okay, it is a kind of a service fee that you give to your bank. So bank margin will be used in all transaction types. So cash, you understood. TOM, as I said, spot rate minus TOM spot. Just like a component of cash spot, you have a TOM spot for 1 day and minus the bank margin. So if you want to take a spot, then it will directly be the spot rate minus the bank margin, and you will get the credit in your bank account 2 days later. And as I said, for any forward transaction, you have the spot rate plus the forward premium for that maturity minus the bank margin. Okay, so probably what I'll do is I will share this PPT also with all of you. So this becomes a ready reference for you to understand what are the various transaction types and how different rates or different calculations are used for a conversion. And once you understand these calculations and conversions, you will be able to ensure that there are no disparity in rates. Okay, now this first line is something that I have heard from a majority of companies in India. Okay, sorry, this first line. I always feel banks overcharge for converting foreign exchange. Banks always overcharge in terms of conversions. Okay, now why does that happen? And let's try and understand how to minimize that conversion cost and how to ensure that I am smart enough to understand what are the different transaction types and what kind of calculations happen whenever I want to do a forex conversion. Okay, see, all these rates that I'm talking about, they are real-time rates and they come on terminals. They are very rarely quoted on public platforms. So all the public platforms, whatever rates you get, they are all delayed rates. Public platform will never give you a real-time price. The real-time price comes in terminals. Now at Myforexeye, what we have done is we have created an app where you will get real-time prices. Okay, as of now it is free. As of now it is free, but real-time prices cannot be given free for a long time. So as of now, for a few months, it will be free. You can download the app and you can from the Play Store or the App Store, and you can get the app and you can get real-time prices. That solves a big problem of the lack of transparency of rates in India. Okay. Another very big problem is what I discussed about bank margin. Bank margin is something which, as I said, is a compensation that you pay to your bank. In majority of the cases, the bank margins are unclear. They are kept variable. They are not fixed. Understand one thing, it is a charge to you. A bank margin is a charge to all exporters and importers. So since it is a charge, the charge has to be fixed. The charge cannot be kept variable. The charge cannot be kept unclear. So the first step in eliminating rate pilferages or rate leakages in your system, in your business is, first step is to decide and fix the bank margin. Generally what happens is in India, in India, banks just quote a net rate. Any transaction you do, bank gives you a net rate. You don't know what is the rate of the day, what was the high of the day, what was the low of the day. You don't even know what was the spot rate taken, was the cash spot subtracted, how much bank margin they have taken. You need to get charge of all this. You need to take charge in terms of understanding what first step is the transaction type, the second step in understanding what is the bank margin that I am paying to the bank, and what are the various components. If it is a cash rate, storm rate, spot rate, if it is a forward rate. So understanding the transaction type and understanding the bank margin are two most important things to ensure that the rates that you get from your banks are clear and transparent. Okay. Understand one more thing, that the banks are your counterparty. Okay. And the bank is there to do some business. So just like any other counterparty, they also want to do profits, and the profits comes from you because you are their counterparty. So what you need to ensure is understand all the rate transaction types, understand the bank margin, keep the bank margin clear and fixed. Another challenge is in terms of the volatility of the rates. So you can hire a professional in terms of managing the volatility, because on a normal day, the volatility on the dollar INR exchange rate, the volatility is anything between 25 to 45 paisa. So if you hire a professional, the professional will be able to time the market properly for you. Okay. So understand, as I said, the rates part, focus on it, understand the transaction type, the bank margin. Okay. Let's move on. Another one small aspect I want to tell about the rates part is for all those exporters who do forward contracts. I'm sure a majority of you would be doing forward contracts because that is a very good and effective way of minimizing your risk. You are getting your receivables in future. You want to fix the rate as of now for the delivery in the future. So you get a spot plus the forward premium for that maturity. Okay. Now, a very big question is, what kind of forward should I do? Now, there are actually two types of forwards. You can do a forward for a period, what we call as the window forward, where the maximum period is 30 days. Okay, so you can do from 1st till 30th. You can do from 24th of one month to 22nd of the next month. So the maximum window is 30 days. Okay, so you can do for the next 1 year. Actually, you can do for the next 5 years, but the liquid markets are there for the next 1 year. Okay, so the other way of doing a forward is that you do for a fixed maturity. Let's take 20th of December or 31st of March or 10th of April. You can do for a fixed date. The bigger question is, what kind of forward should I choose? Should I choose a fixed day forward or should I do a window forward? Now, before I answer, understand in each thing, if you do a fixed day forward, you get forward premium till that date. And since you are an exporter, you're going to receive premium. There is a premium of about 25 paisa per month. Okay, so if you do a 6 month forward, you get 1 rupee 50 paisa, 1 rupee 60 paisa as forward premium. Okay, so that premium is added to the spot. So an exporter receives the premium. If you do a fixed day forward, you get premium till that date. But if you do a window forward, you get premium till the first day of the window. So if you are doing a 30-day forward, you are getting you fixed the date as 1st till 30th of a month, you receive premium till the first day. So if you do a window forward, you are losing effectively that 30-day forward premium. So what, as an exporter and as a smart exporter, you should do is, you should always do a forward for a particular maturity, a fixed date maturity. And if your inward or receivable comes ahead of the maturity, you can early utilize the forward. You can pre-utilize the forward. And whenever you are pre-utilizing the forward, you can repay back the balance of premium or the excess premium that you have received. Okay, so this is something for all exporters, that whenever you do a forward, do a fixed day forward, your money comes earlier, early utilize the forward. So there are already 3-4 questions. I will answer one by one. Now, one gentleman has asked how much premium bank gives generally. Chitranjan, premium depends on currency. So if you're looking at dollar INR, there is a premium of about 25 paisa per month. Okay, but this premium changes. A few days back it was 20 paisa per month. A few days before that it was 26, 27 paisa per month. So premium will depend upon the currency pair, and the premiums will depend upon maturity. Longer is the maturity, higher is the forward premium. Okay, now there are lot of things. What I would suggest is, let me run through the presentation, and I will explain each and everything. Whatever queries you have towards the end, I will explain each and every query of yours. Okay.
Yes,
So
Mr. Victor, we take the questions in the end. Let's carry on smoothly.
Okay, great. Thank you, Dr. Kaur. I will take the questions at the end. Okay. Now, the next part that I wanted to talk about is, I said in the beginning about a slight misguided conclusion by exporters. Okay. Now, the exporters in their shoes are perfectly right. कि भाई dollar तो हर बार ऊपर जाता है. Dollar is always appreciating. A few years back it was 70, now it is 75. So why should I hedge? Okay. Now I will give you certain facts which you need to understand. Does the rupee always weaken? Is the line continuously upside? Does rupee always weaken? Actually, no. Rupee weakens a lot, but rupee gains also. Okay, so it is not a unidirectional one-way movement. First thing. Second thing, whenever you are doing a forward, there is a concept of forward premium. Just like I said, 25-30 paisa of forward premium every month. So that forward premium comes to around 4 to 4.5% per annum. So that also plays a big part. Are we looking at the full picture? That is the big question. Okay, rupee weakens usually, rupee gains also, and there is a concept of forward premiums. So are we looking at the full picture when we say that dollar is always going higher and I should not hedge? So what we did was, we did a very simple analysis. I will show you what analysis we did, and the conclusion of this analysis will answer the question, should we do forwards or not? And when I say we means exporters. I am receiving premium, so we are talking about exporters. I took data from 1st of Jan 2000 onwards. Okay, which means effectively 21 years, 20 and a half, 21 years. On every working day, I took 3 forwards. I took a forward for 3 months, I took a forward for 6 months, and I took a forward for 12 months. Okay, every working day, 3 forwards. 3 months, 6 months, and 12 months. On the maturity, which means after 3 months, I just compare the forward rate with the spot at maturity. Okay, point number 4, on maturity, forward rate is compared with spot at maturity to compute gains and losses. And since I have done forward every day, so 3 months, every day onwards, I will have a forward maturing. Okay, so I will have multiple days to compare my forward rate with the spot at maturity. So when I do a forward, I receive forward premium, which is around 4.5%. Okay, and if I don't do anything, then I get spot at maturity, which is the normal rupee weakening. So this analysis is a simple comparison between dollar INR forward premiums and the rupee depreciation for the last 20-21 years. Let us look at the results. The results are quite startling. Let us look at the results. Okay, now this is the result. Let me explain what is it. Sorry. Average forward premium is around 4 to 4.5%. Okay, average forward premium is around 4 to 4.5%. Average rupee weakening is 2.7%. Okay, so average forward premium is 4 to 4.5%. Average rupee weakening is 2.7%, which means anywhere between 1.3 to 1.75% is the gain that an exporter gets by regularly doing forwards. the total number of trades since we have done for the last 21 years, it's quite a lot. It's 5,100 and 5,200 number of trades that we have done. And we are 65% of the time we are successful. When I say successful trades, it means that my forward rate is higher than my spot at maturity. So 65% of the time, if I blindly do a forward for 3 months, 6 months, or 12 months, I make a profit of anywhere between 1.3 to 1.75% per annum. Okay, so it is a very simple conclusion that by regularly doing forwards, an exporter ends up gaining. And let me tell you one thing, ladies and gentlemen, this is a fact which smart market participants already know in India. And this is one of the predominant reasons that large exporters in India usually forward hedge, usually sell their receivables for the forward markets, because they have seen that historically in the last 20-21 years, the premiums that they receive are around 4.5%, and the risk that they carry, which is the rupee weakening, is only around 2.7%. So anywhere between 1.25 to 1.75% is the net gain that you get by simply doing forward contracts. Okay, so this data, and again, ladies and gentlemen, this research, any one of you can do it independently, because this is all done from the actual market data. Okay, these are all facts and figures. This is not a view, this is not a perception. Okay, this is actual facts and figures. You can take this from any bank or from any consultant. You can get it from any terminal. You can actually fact check this data. It will come, the result will come the same. Okay, so all exporters who are there, who are listening to me, please manage your risk, regularly hedge your forwards, your receivables using forwards. You not only gain on a regular basis, you also eliminate risk. If you don't hedge, you are only exposing your business to market volatility. If you hedge, there is a lot of certainty in your cash flows and in your financial statements. Okay, any questions towards the end of the session? Now, one more very interesting point or important aspect that I want to tell all exporters is on optimizing interest costs on exports. Now, what does this mean? This means that all exporters take some kind of a working capital funding. Okay, and for export funding, it is a simple concept of packing credit. So all of you must be taking packing credit to fund your exports, to finance your exports. So what is the form of packing credit that I take, and what is the risk management that I need to do to ensure that my interest cost is the minimum or it is the lowest? Okay, now let me explain in the next slides. See, packing credit can be taken in two forms. One, you can take it in INR, okay, or you can take it in foreign currency. Okay, what you call it PCFC, packing credit in foreign currency, or PCINR, export packing credit in INR. Now till 30th September, the government was giving a 5% subvention for MSMEs for packing credit to be taken in INR. Okay, now unfortunately on 30th September they stopped. There is a lot of discussion that they might come out with a renewed way of an interest subvention. But let us take two cases. The first case here is that there is a subvention, 3% for MSMEs, 5% for MSMEs, 3% for non-MSMEs. What do I do if there is a subvention scenario available? It was there till 30th September. It will probably come in the future. So you have to keep this analysis in your mind. Okay. In the next slide, I will also show what do we do if there is no subvention, which is like the current scenario, that there is no subvention. We are only anticipating subvention to come in, but bottom line, abhi subvention nahi hai. So if the subvention is not there, what kind of packing credit should I take? Okay, so that is the next slide. Current slide, subvention scenario. Subvention is there, 5% for MSMEs, 3% for non-MSMEs. Okay. Now, if I just take a simple packing credit in foreign currency, PCFC, I pay LIBOR plus spread. Okay. So LIBOR is actually very close to zero now. Obviously, there is no LIBOR. There is SOFR, what is called the short-term funding rate. So that short-term funding rate for dollar is very close to 0, 0.4, 0.5%. And there is a spread of about 2 to 2.5%. So PCFC cost comes to around 2.5%, 2.2 to 2.7, 2.8, maximum 3%. Okay, so this is the interest cost if I take packing credit in foreign currency. What do I do if I take packing credit in INR? Okay, how does the mathematics work? Let's take two cases, MSMEs and non-MSMEs. Now, an MSME usually has a packing credit INR rate of about 7 to 8%. Okay. Now, in that 7 to 8%, you get a 5% subvention. Okay. So my cost is 2 to 3%. Now, there is a catch in packing credit in INR, what you need to understand very well. I'll tell you what that catch is. See, when I take packing credit in INR, I take an INR loan. Okay. But I'm going to receive a dollar in the future. Okay, I take an INR loan now, but using this loan, I run my machines, I pay my labor, I buy my raw material, I ship it, pack it, and then ship it. And then after a few months, I get my receivable. So when I get my receivable, foreign currency receivable, I convert that receivable to INR and then repay the packing credit. Now the simple smart extension is, really smart extension is, for this future conversion of foreign currency, you can take a simple forward. And if you take a simple forward, you get 4.5% of forward premium. So if I get 4.5% of forward premium, my interest cost for an MSME is negative. Hear me again, hear me correctly, the interest cost is negative. 7 to 8% is the PCINR cost, 5% is a subvention, 4.5% is the forward premium. Net interest cost is 0 to negative. Now, let me take a non-MSME case where I get 3% subvention. Their interest cost, since they are relatively medium to large scale companies, their interest cost is slightly lower, 6 to 7%, but they get 3% subvention. And same forward premium, if you apply that methodology, you get the forward premium of 4.5%, your interest cost becomes 0. So compared to PCFC, which was having 2.5 to 3% interest cost, the interest cost in PCINR and hedging the PCINR for your forward dollar receivables, your interest cost is 0 to negative. The next slide outlines the step by step, how do you do it. Step 1, avail packing credit in INR. Let's take 10 crores and your maturity is 90 days. You have to repay in 90 days or 120 days, 180 days, depending upon your export order. Convert that PCINR into the current rate to get an equivalent dollar. For this dollar, you take forward contract and you get a forward premium of 4 to 4.5%. On maturity, when you receive the dollar remittance, use the forward to convert to INR and repay the packing credit. So you have subvention, you have forward premium, all working in favor of you. And if you smartly do it, regularly do it, your export funding cost is effectively 0 to negative. Okay, so this is the case when the subvention scenario is there. Unfortunately, we are in this scenario. Subvention was there till 30th September. There is no subvention here yet. Okay, we are expecting it to come. But Mr. Victor, what happens now? There is no subvention. How do I do my export funding? Okay, so as of now, if there is no subvention, then the packing credit in foreign currency and packing credit in INR comes to a very similar level. Okay, because I don't get that 3% or 5%. But one thing what has happened in the recent past is that the PCINR cost has come down. What we were taking at 7-8% earlier has now come to 6-7%. Okay, so if your packing credit INR cost is 6 to 6.5%, and there is a 4.5% of forward premium, your cost is still 2%. PCFC will come at 2.5%, 2.7%. Okay. You know why I'm telling you all this is to indicate that whenever you are going to take a export funding, evaluate both packing credit in foreign currency and packing credit in INR. Packing credit in foreign currency, evaluate LIBOR plus spread, what is my total interest cost, and in packing credit in INR, evaluate what is my INR cost and what is the forward premium I get if I do a simple forward. Okay, since it is a cost item and there are choices and options, compare PCFC with PCINR and then take a decision. Okay, so the next slide, this is what the subvention, or this is what the thumb rule is. If the subvention is there, certainly avail PCINR. Any mathematics, simple mathematics will give you, if the subvention is there, avail PCINR. If the subvention is not there, do a comparison. Do a comparison between PCFC and PCINR, and whichever is cheaper, take that. And generally what we have felt is, if the subvention is not there, then PCFC works out to be cheaper. But I suggest all of you individually, you should do your mathematics. Okay, if in the current scenario, when the interest subvention is not there, evaluate what is the PCFC cost and also evaluate what is the PCINR cost. Take the forward premium correctly, okay, and adjust that forward premium to your PCINR cost and see what is my net interest cost. Similarly, do a LIBOR plus spread analysis for your PCFC cost. Okay, so that is what it is about the optimization on interest cost. Okay, now this is something more to do with subjectivity and views. As I said, most of the people, whoever I meet, everyone asks me, Mr. Victor, where is dollar going? What is the view on dollar? Okay, now before I answer that, let me tell to each and every one of you, ladies and gentlemen, I do not know. It's very plain and simple. I do not know. And I can assure you, no one knows. Okay, it is a financial market and it is a massive financial markets. Okay, the sentiments change minute by minute, economic data change minute by minute, inflow outflow changes very frequently. Okay, so since it is a massive market, it is very difficult to make a forecast. Okay, but since you have invested time and come here, I will give you an intelligent forecast. I will tell you what fundamentals we should look at, and I will also tell you what technical indicators are indicating. Probably then you will get a fair bit of an idea as to if all of it, the technicals and the fundamentals make sense. It will give you a fair bit of an idea where the dollar could go. Okay, but understand very well, no one can forecast, no one can become God. All of us are humans and we will remain humans. So we can't forecast. We don't know what future is. And take it from me, even the RBI governor doesn't know what the future is, where the INR is going. Even the Honorable Prime Minister doesn't know where the dollar is going. No one knows. But we can make an estimate. And I will give you an intelligent, reasonably intelligent or smart estimate, considering various factors. Okay. Now, these are a few factors that I want to outline and I want to indicate. Okay, one specific factor I want to tell you is about the US stimulus, which was available and it is still available, but it is going to reduce. See, what happened was last year when COVID stuck, year to last, when COVID stuck, there was a complete shutdown and economies were struggling, companies were struggling. So what a lot of these central banks, including the Federal Reserve of US, what they did was they printed a lot of money. They issued a lot of bonds and they were giving money, monetary support in the form of bond buying to companies and individuals so that they could recover and restart. And this monetary stimulus has been there since April 2020 and it has been continuous every month. Okay, $120 billion of stimulus every month. In the last meeting, which was there on the 2nd and 3rd of November, the Federal Reserve Chairman very categorically indicated that this monetary support, or what we call as the stimulus package, economic stimulus, is going to be reduced. Okay, it is going to be reduced, and their estimate was $15 billion per month. They're going to reduce the stimulus. Now, with inflation going higher in US, probably they will want to withdraw or reduce by a bigger amount. They want to do it faster. Okay. So one thing, money printing or easy money that was available for almost 1.5 years, that is going to go. Okay. Fresh money is not going to come in. And since fresh money is not going to come in, there could be a worry that there could be outflows as well. So in Indian markets and a lot of other emerging markets, dollar inflows could reduce. And if dollar inflows could reduce, all of you can make an estimate, where is the dollar going to go? Okay, first point. A lot of other points also later, but I'll touch upon 2-3 points. Another very important aspect is the crude prices. Okay, all of you understand that we import a lot of crude because we don't produce crude. We have to import crude for our normal functioning. Okay, and this is a very inelastic commodity for us. We have to regularly import. It's not that we can't import for a month. We have to regularly import because we don't produce it. And as you would have seen, crude prices was in between $50 to $60 per barrel for a very long time. And suddenly in the last 1 month, it has jumped to around $80 to $85. Even though last 2-3 days, it has come down a bit to 72, 73, 74. But crude prices on general standards are on the higher side. Okay. So you can understand very well, if the crude prices are higher, there will be more and more dollar demand. So one side, the dollar supply is reducing. On the other side, the dollar demand is going higher because of higher crude prices. Now there is an FII inflow concept. The institutional investors, global institutional investors who invest money in Indian financial markets, that has been quite robust for the last 2-3 quarters. And it looks like that it might be robust. But there is a big question mark of these FII inflows, considering that US is going to reduce the stimulus. If the stimulus is going to reduce, then the availability of money to come in the form of FII inflows is going to get reduced. Okay. Now, there's another very important factor about the intervention by the central bank. Okay, what we have seen in India, the central bank very actively or regularly intervenes in the forex markets to control the volatility. And as of now, what we have seen, rupee has only moved from 73.50, 74 to 75, whereas the dollar index has moved from 90 to 96. So there is a big jump in the dollar index, but rupee has barely moved by just about 1.5%. Dollar index has moved by about 5-6%. That is primarily because the intervention by the central bank, they are looking at controlling the market. Okay, and all of us understand there are very important elections that are going to come early next year, February, March, April. And in a country like India, where we are so heavily importing crude, if domestic fuel prices keep going higher because of exchange rate or because of higher crude prices, it is very difficult to get votes. Okay, so there is a beyond economics, beyond normal financial markets, there is a function which has to be monitored, because obviously there are certain things that are politically driven. So RBI intervention plays a very big role in a currency market like dollar INR. So we feel that even if rupee has to weaken, sorry, apologies. Even if rupee has to weaken, the weakening will be limited because of the active intervention by the central bank. There is a decent amount of forex reserves available, and RBI has a lot of institutional tools as well to control any undue volatility that might happen. Okay, so looking at most fundamental factors, we feel the trend is slightly on the upside. I am betting more towards 76, 77 than 72, 73. If you fundamentally ask me, looking at the overall scenario, looking at the new COVID variant that has come out and the uncertainty that it is creating, Okay, I don't know how much is true or how much is not true. Media always has a way of highlighting and flashing things. That is something beyond. But overall, the situation is slightly nervous and slightly uncertain. And in nervous and uncertain situations, emerging market currencies like dollar INR, they could feel the pressure. Okay, so my bet is towards 76, 77, 78 rather than 72, 73. So as far as fundamental goes, this is the idea that we have highlighted. I also want to highlight the technical part as well. Okay, this is something very interesting. All of you should sometimes, whenever you get time, should have a look at this. See, this is the weekly dollar INR chart. And if you would have seen, it is an uptrend for the last 10, 11 years. Do look at the red line and the blue line. Red line indicates the connection of the support. So we have seen that the market is has to be above the red line. Going below the red line could be an exception. Being above the red line is the kind of the rule. Also look at the blue line. Blue line is one of our technical, very simple technical indicator, nothing complex. It's a moving average. So in the last 11 years, if you would have seen, the markets have remained above the blue line most of the time. Below the blue line, it has been there only for about 3 years in the last 11 and a half years. Okay, so that tends to give some kind of technical clues. So overall, technically, if I analyze, if you ask me, my personal conclusion is even technically, fundamentally, I explained above, even technically levels around 72, 73 looks to be a very, very important support. Very unlikely that the dollar will fall below 72, 73. Okay, and majority or predominant or most possible probable scenario is that the dollar going higher towards 76, 77. What is the timeline? When will it reach? Obviously no one knows, but the direction is upward. So even if it comes down, I am not saying that rupee will not gain, it will not come down. It will come down, and it has to come down because it's a volatile market. It's a two-way market. But coming down and falling below 72, 72.50, that looks very unlikely. So 72, 73 looks to be a very important long-term support. Going higher is the most probable trend. So if you ask me 72 or 78 in the next 1 year, then I will probably say 78 is more possible. 76, 77 is certainly possible. Okay. So that is on the view side. Lastly, I want to touch upon our mobile application. Okay. Sorry. This mobile application is going to be a very, very handy tool for all exporters as well as importers because it will give you real-time prices. And for us, for any exporter on the ground, the biggest challenge is getting the transparency of rates. So this mobile application will clear out all the problems as far as transparency of rates are concerned. Okay, I'll explain one by one. So first thing is you get real-time prices. A lot of people might ask questions that no one can give real-time prices for free because terminals and all cost quite a bit. And if terminals are charging so much, then how come you are giving so cheap? And in fact, you are giving free. Now, the answer to the question is we are giving it for free as of now. Okay, we have our cost economics worked out. So it is as of now free, but probably sometime in the future it might become chargeable. But take it from me, even if it becomes chargeable, it is going to be a very small cost. It's going to be a very small fee. And the benefits that you can get is massive. It can run into lakhs and crores because you are getting real-time prices. And even for a 1 lakh or 2 lakh dollar transaction, even if there is a 20, 30 paisa difference, you are ending up saving 40, 50,000 rupees for each transaction. Okay. So it will give you real-time prices. Sorry. If you on the home page, you get all the rates. If you tap on any of the exchange rate, it gives you a calendar. It opens a calendar and the calendar gives you the forward rate for each currency pair for the next 1 year. Okay. So here I am not only giving you spot rates, I am also giving you forward rates. And I am also giving you cash rate, term rate, spot rates, everything. So all rates, any currency pair all the problems are solved using this Myforexeye mobile application. Okay, all the rates will be solved using this app. Now, we have invested a lot of time, energy, expertise. A lot of Forex market experts have come and invested their energies on this. So we have not only made it a data provider, we have made it intelligent and smart as well. Okay. Now, what is the smartness? I'll tell you. A lot of times, all of you, let's take the market is at 75, and you feel, okay, when it comes to 75.50, I want to take a decision, or I want to do something. I want to take an action. If it comes to 75.25, I want to do something. But it is at 75 now. So you have to keep looking at it. You have to keep monitoring 75 se 75.25 kab hua, or when has 75.25 happened. You don't need to monitor. You can use the mobile application to monitor it for you. You can set an alert. If the market is at 75 and you want to take an action at 75.25, sorry, apologies. You can keep an alert in the system on the application that please alert me if the market touches 75.25. So if you put an alert, the application will give you a notification. The application will send you an email. Okay. So the system, the mobile application will work for you. You need not look at the market. You need not look at the rates throughout the day. The application will look at for you, and it will alert you as and when whatever defined parameters you have put in, 75.50, 75.25, whatever parameters you have put in, it will alert you for that. So we have made it smart enough to work for you. You not only get rates, you get alerts as well. So it is a smart system. Okay. Now, there is a lot of community who wants to trade in currency markets. Actually, I am quite surprised by the enormity and by the number of people who want to trade in FX, because everyone wants to diversify from equities. Equities, everyone has been doing for ages. Now they want to try out something new. So we have a full-fledged FX trading platform as well, and you get trade signals. Okay, you get signals. If you want to trade on foreign currency, you can trade using these signals. These are, given by professional dealers and traders who sit in the market throughout the day. They analyze the market and then they give a trading signal. How has the trading signal performed in the last 6 months, 1 year, 9 months? Everything is given in the app. So it's a very truthful and a very clear report card that we have given signals in domestic markets, in international markets for the last 9 months. How has it worked? How has it worked in the last 1 week? How has the performance been in the last 2 months, in the last 3 months? You can all evaluate it on the mobile application itself. Okay, fantastic. So in addition to that, if you have personal Forex needs, okay, a lot of people need to travel abroad. They need to get cash of dollars. They need to get a foreign currency card. So whenever they need Forex for personal needs, Myforexeye is a licensed approver, licensed money changer by the RBI. So we can deliver it to your doorstep. It can be delivered anywhere in NCR. We have the entire network connectivity in National Capital Region. So if you have personal Forex needs, you can directly input your needs from the mobile application itself. Okay. So a lot of it, I've been talking for almost 1 hour now. So all over to you for the questions. There are a lot of questions.
Yeah, Mr. Victor, there is a range of questions we have. Will you be taking up question answers, or you want us to?
I am looking at the chat box. Okay, first
Okay.
I look at the Q&A and then I will look at the chat. Okay?
Perfect, perfect. It would be nice that if you can answer it one to one.
Yeah, I'll answer one by one. I have already replied to what Tom is, Chitranjan.
Okay.
I have already replied to what premium, how much premium will give. As I said, premium will depend upon the currency pair. For dollar, it is usually around 25-26 paisa per month. But as I said, the premiums change. Okay. So my application will give you what is the premium for each day for the next 1 year. Okay. So whatever is the premium quoted on the application, that is the market rate. You can be rest assured. Okay. Now there is a question: when buyers send full payment and pay their side of the bank charge, my bank deducts $24, saying that they were deducted by USA side of the bank, while ICICI have deducted. Then why are the charges? Okay, Mr. Lokesh, uh, this is something which probably you need to check with your bank. Whenever you are doing a banking transaction, you must have a statement of charges. Okay, if you have a sanction or if you have an approval letter, I'm sure you must be having a sanction letter. In the sanction letter, please dig deep and understand the statement of charges. Okay, if there is a swift charge given in the statement of charge, then it will be charged. If the swift charge is not given in the statement of charge but they are still charging it, then you need to speak to your banker, your relationship manager, that if this charge is not outlined in my sanction, then why is it charged? Okay, so this has more to do with your negotiation and discussion with your banker. Okay, now there is another question. What happens in a fixed day forward if the payment does not come on time? Okay, Dipali Kohli. Dipali, if your payment does not come before the fixed day forward date, there is no problem. You can simply early utilize that forward. For example, if your forward you have taken for, let's take 31st of July, okay, and you receive the payment any day before 31st of July, you can early utilize it. And when you early utilize, the difference of days premium you have to pay back. Again, 31st July, if you get your money on 18th July and you early utilize on 18th July, from 18th to 30th, 31st, 13-day premium you have to pay back. Okay. Now the question I think you want to ask is, if my money did not come by 31st July, right? So if your money has not come by 30th July, you can roll over the forward. Okay. If it has not come in July, it will come in August. Or if not August, it will come in September. So you cancel the forward and rebook the forward for August end or September end, whatever period you feel or whatever date you feel that my payment will come before that date. Okay. So rollover is a very simple cancellation and rebooking process. You can do it very easily. Okay. Otherwise, if you have want to ask anything more in detail, my email ID is given here. Please, send me a mail. I will probably speak to you to clarify your doubts. Anything more detailed than that. Okay. Now, what is the forward premium bank charge? Okay, sir, you receive a forward premium. The bank will only take a bank margin. Mr. Ramesh, bank will only take a bank margin, which is what you have agreed to pay to the bank, 5 paisa or 4 paisa or 7 paisa per foreign currency. That is the charge that the bank will take. The forward premium is something that you receive. Okay. I hope that clarifies. Now, Lokesh Parashar, are you talking about packing credit for service exporters? How does service exporter avail packing credit? Sir, service exporter, any exporter can avail packing credit, whether it is a manufacturing exporter or a service exporter. Since you are an exporter, you have an export order, you can take packing credit or export funding, irrespective whether you are manufacturer or a service exporter. Okay, you need to just have certain documents which the bank will ask if you are wanting to avail packing credit. The question that I answered is, if I take packing credit, which one should I take? Because there is an interest cost element available. So since it is a loan and it is a credit I am taking, I need to ensure that the interest cost is the lowest. Okay. And now another question is Mr. Harish Kumar. In case of service exporters, what methods can be applied to get the conversion at good rates? Banks are converting the currency at the rate showing on RBI portal. May you advise in detail so that we can. Okay, great, Mr. Harish. This is exactly what I answered in the rates part. See, first thing, RBI portal, if you see, RBI only quotes a reference rate. Okay, reference rate is a way of calculating something, but it is not a traded rate. The traded rate you will get it from our mobile application. Okay, you have to negotiate with your bank. First, the step is to understand what transaction that I am transacting today and I want a credit today. Then there will be a spot rate, there will be a cash spot. My mobile application will give you the spot rate, they will also give you the cash spot. Now, second thing that you have to fix is, Mr. Harish, is the bank margin. 1 rupee, 25 paisa is a very large margin. Okay, I'll tell you how to calculate what the margin should be. Let's take you to 50 crores of exports per annum. Just an example. Okay, 50 crores is about $7 million. Okay, if you pay 1 rupee per dollar as a bank margin, then per annum 7 million into 1 rupee is 70 lakh rupees. So are you paying 70 lakh rupees to your bank only for conversion? That mathematics you need to understand. Okay, so if I do a 7 million transaction, then my cost should be about 5 paisa or maximum 10 paisa. So if it is 10 paisa, then it is 70,000, 7 lakh per annum. Sorry, not 70,000, 7 lakh per annum. Even that is high. If I do 5 paisa, that is 3.5 lakh per annum. So this is the calculation that you need to do yourself to understand what is the bank margin I need to pay. Okay, understand the transaction type, understand the bank margin, and negotiate the rates depending on the learning that you have got. Okay, I hope that answers your question, Mr. Harish. Now, next question. Mr. Raju, what are the chances you think dollar INR will cross 75.50 in coming weeks? Okay, Mr. Raju, you have asked me to forecast. Understand, I'm a normal human. I have been following markets, but will it come? Will it not come? Difficult to say. 75. Well, I think your question is indicated that if it comes to a level, then I should do some hedge. I think that is a more relevant question. Okay. See, 75.50 can happen, but I don't know when it will happen. But my direction is upward. Short term, it might come down a bit. In the next 2-3 weeks, it has suddenly gone up like this. So market might cool off and come down a bit. But medium term to long term, the direction is upward. Okay, and if you want to convert, if you haven't converted for a while, 75.25, 75.30 is a good rate. If you want to take a forward, you can do a forward even now. 75.10.20 is not bad. You get 4.5% forward premium. Okay, now let me come to the next question. Okay, Gitanjali Natraj, in the case of high frequency cryptocurrency trading, how does Forex market work? Is there an exchange, different exchange for crypto? Okay, Gitanjali, ma'am, I'm a Forex guy and I stay miles away from cryptocurrencies. It is not that I don't like that market. I don't get into cryptos because there is no law in India. And typically, I am a law-abiding citizen, so I want to be within the law. I do not want to be out of the law. Okay, so cryptos, as of now, the regulations are not there. There is no exchange. Indians are doing it. We love to do, things beyond legal aspects. But in India, as of now, all of you are aware, cryptos are not permitted, and they are even if you're doing it at high risk. Understand there is no investor protection. So if there is any hoopla happening here and there, whether you will be able to get your money back or not, that is a big question. So I think cryptos is a different level of discussion altogether. I'm not a crypto expert, but one thing about I've been following is RBI is wanting to come up with laws, but as of now, the law is not in place yet. So we have to decide whether we want to do it or not. Yes, for Forex trading, for a Forex market, there is an exchange, NSE, BSE, Metropolitan Stock Exchange, and they have very good liquidity, very large depth and width of the market. Okay, what's the name of your app on Apple Store? Lokesh, it is called Myforexeye. The application is called Myforexeye. So you can get it on App Store and you can get it on Google, Android as well, Play Store as well. Okay. Do you charge a Swift charge for, ma'am, Usha Raikar? Usha ma'am, uh, this is a application for Forex rates and Forex conversions. So remittances and all will not happen from my application. It is only equipping you and providing you real-time prices so that you can negotiate correct prices with your banks and with your counterparties. Okay, so there will not be any receiving or payment systems from my application. And since there is not going to be any receipt and payment, international payments on the app, I can't do anything on the Swift charges part. Okay, great. Now next is Mr. Kapil Kumar. For third party payments is not getting from, and they only allowed to work on LC terms, whereas our buy is going to stop soon working on LC. Don't want to work PTR. Okay, Mr. Kapil, I can probably connect you with a trade finance expert. This question is more about trade and banking than Forex. I can connect you to someone. If you ask me, I can connect you to my partner who has been a banker himself, two of my partners who have been bankers. So you can, Mr. Kapil, you can take down my email ID and let us discuss this offline. This will need more discussion, more persuasion, and something that we might have to do with your bank directly. So let us take this offline. Okay, Mr. Kapil, please take my email ID and do send me a mail. We will connect separately. Okay, can you throw some light on different types of rate? Bill rate, TT rate, card rate. Very good. And what is reasonable bank margin? Rohit, let me explain. The basic rates are spot rate. Okay, spot rate, cash rate, term rate, forward rate. Banks have different terminologies. Okay, and mostly these terminologies are to confuse you. Bill rate is just a bill buying or bill selling rate. Whenever you're negotiating a document, they will have a bill rate. Whenever there is a telegraphic transfer, there will be a TT rate. Okay, nowadays bill rate, TT rate and all are not used. Whatever is there as a spot rate, that is what used. If you have any conversion, use the spot rate minus the cash spot is what the rate you should get, and the reasonable bank margin. And Rohit, the bank margin depends upon two different things. First thing, what is your annual Forex turnover and what is your credit rating? If your credit rating is good, if your turnover is reasonably good, then your bank margin should be less. Understand one thing, bank margin is a cost and you need to keep the cost to the minimum. I gave you a formula. Just convert your annual exports or imports to dollar. Okay, and if you feel that 10 paisa per foreign currency is a good margin, just multiply that amount to your dollar amount and see what is that cost per annum. Obviously, if the cost per annum is very high, you want to reduce that margin. Okay, so that is one way of calculating what the reasonable bank margin should be. Card rate is, never take the card rate. Card rate is the worst rate of the bank. Okay, card rate is usually charged for very small amount of transactions, $500, $1,000, $1,200. For very small amount of transactions, card rates are used. Okay, for export import, if there is large volumes involved, you should never use the card rate. It is a big loss to you if you use the card rates. Can we make remittance through your app? No, sir. You can make remittances through your bank only. The application is more of data provider, market inputs, and alert systems, Forex trading, those kind of stuff. Okay. Does your app give live spot rate? Yes. Ramesh, it gives you live spot rates. It gives you live interbank spot rates for different currency pairs. Is there any difference of rates for current account, capital account? No. The rates will not be different. The market is the same, Rohit. So whether it is a capital account transaction or it is a current account transaction, the rates are the same. The only difference it will be capital account transactions are usually larger in volume. So you have to squeeze the bank margin. Current account can be small, large, big, anything. So the margin will be adjusted accordingly. Okay, so a lot of questions answered here. Okay, and let me come to the Q&A. Acha, Q&A I have answered. There is a lot of chat here. Okay. Okay. Can you repeat can you give me an example for forwards? Okay. Usha Riker, can you give an example for forwards? Okay, assume you receive $1,000 and the forward is 30 days. Okay, so a forward is just like fixing, it's a contract that you do with your bank to fix a rate for the future. Okay, so you can do a forward for 30 days, 60 days, 90 days, any period. Okay, just allow me a moment. I need 1 minute. Huh? Yeah, sorry, very sorry. So a forward is a contract that you do with your bank. It can be done for 30 days, 60 days, 90 days. So the current spot is 75. So you get 20-25 paisa premium per $1 for 1 month. So it could be if it is 1 month, then it will be 75 plus 25, 75, 25 for 1 month forward. Okay. So that is the example. Yeah, it is 20 to 25 paisa per dollar. So for $1, it will be 20 to 25 paisa.
This is a
Okay,
comment.
now I'll take the other questions as well. Okay, can you explain with an example? In addition of India and MSI, it has attract flows and annual. Yes, very good. Mr. Amit Kulshetra. Okay, I agree. This is an important aspect that, there is a possibility that Indian government bonds can be included in some MSCI indices. Okay, and that will attract inflows into the debt market. Okay, it will not attract inflows in the equity market. See, it depends upon which index it is getting included. If it is getting included in debt index, then the debt markets will receive flows. If it is getting included in equity index, then equity market will receive inflows. Okay, that will if the inflows are substantial and comfortable, then obviously it will limit the rupee depreciation. But understand one thing, we will regularly keep buying dollars because of our crude. How much inflows will come in because of MSCI inclusion is something that we need to watch, and we are actually not very clear about. Okay, the mobile application name, Ranjan, is Myforexeye. I can type. I have typed at the end, you can see it, mobile application name, Myforexeye. Okay, so there is a whole lot of questions. Does your app give live rate? Yes, it gives live spot rates. Does it cover all currencies? It covers majority of the currencies, whatever is traded in India. Okay. One gentleman has asked, Mr. Narendra has asked, is the conversion rate depends on the volume? See, sir, typically the conversion should not depend on the volume. You should have a fixed bank charge. So irrespective of the volume, your charge will be the same. But the banks have a logic in saying about the conversion because, for bigger volumes, they are able to get better deals. So bigger volumes will give you, lower, better rates. So which means lower margins. Okay. But what you should, if you're a regular exporter, then what you should do is you should typically have a fixed margin irrespective of volume. Until unless your volume, sometimes it is very low and sometimes it is very high. If you have a very large variance in your amounts, then for some small volumes you can have a different margin. For normal volumes, bigger volumes, you can have a smaller margin. Okay, can we have a demo in price if this is our number references? Okay. Okay, Mr. Mohit, I will arrange for a demo for you on your number. I will just take a photo of your number and I will arrange a demo. Okay, now different types of rates I have explained. We at the Federation of Buying Agents will be happy to have such session for 650 members. Okay, Lokesh, I will try and connect with you as well. I'll tell my team to connect with you for a separate session. The name of the application I have put in, it is Myforexeye. Data is, okay, Mr. Sanjay, data is taken from the year 2065, 4%. Okay, Mr. Sanjay, what you have said is very true, that if you take those, crisis places away, then the success ratio will be much higher. But, we can't be biased in our analysis. We have to be neutral in our analysis. So we have to include all scenarios. So that 65% success is inclusive of all scenarios, the bad and the worst times both. Okay, so even with the worst times, it is 65% successful, which is a very high success ratio. Okay, Mr. Ramesh Behera, do you? Yes, we liaison with different banks to issue currency cards, forex travel cards, and if you have any requirement, we can give it to you. My team can give it to you, forex travel cards as well. Okay, what are your brokerage charges? Brokerage charges will come on forex trading. So brokerage charges are very minimal. Okay, very minimal. What the standard brokers charge, we charge far less than that. Okay, and again, Abhishek, if you want to interact with me separately on the trading part, please take down my email ID and send me a mail. We will connect separately. Okay. Again, as I said, remittances, receivables, which cannot be done. It is a rates app. It is an alert app. It is a research. It is a market driven app. It is not about remittances, payable and receivable. That has to be done from the bank itself. Okay. Mrs. Kaur, there is one gentleman who is asking assistance from SEPC.
Yeah, Mr. Supratam Basu is in touch with me.
Okay.
And we already had a few connections with Invest. He needs some FDI for mega projects, solar, solar projects. We are working on that.
That is Mrs. Tour's department, so I will put my hand.
Yeah, sure. Yeah. I'm in touch with Mr. Basu.
Sure. So what will be the maximum minimum bank margin will be charged dollar INR? Okay. Mr. Amutavan, the minimum margin, I have seen margin as low as quarter paise. Quarter paise means 0.0025 paise per dollar. Okay. And the maximum I have seen is 1.5, 2 rupees also. So there's nothing called maximum or minimum. I just follow the methodology I said. Total exports that you have per annum, just convert into the dollar amount, and whatever margin you are paying, multiply by that dollar amount and see what is the cost that you incur per annum only on bank margins. That will give you some guidance and understanding in terms of freezing what should be my bank margin or what should be my appropriate bank charges. Mr. Munjal, Mr. Suresh Munjal, can we get the PPT? Yes, sir. Mrs. Toor, there has been some people who has been asking for the PPT, so I hope we can
Yeah,
share.
we will be sending recording to people. Whosoever I've shared an email ID at the end, will be sending you the sessions recording. If you need it, it can be sent to you. I've already shared anupam.sharma. I've sent an email ID where you can request for this whole recording itself.
Sure, great.
Okay.
So that is fine. Okay, so we are facing challenges while booking our receivable in foreign currency. Which rate to use to record the transaction in books of accounts? Okay. Again, Rohit, books of accounts is an accounting entry. So I think you should be more worried about profitability than accounting. But books of accounts, in terms of receivables, you can follow any accounting practice. A lot of exporters use the rate given by the RBI, which is the reference rate for each day. A lot of people use it from trade purposes also. So rates is what I think reference rate will be fine for you. If you have to just keep accounting practices, bookkeeping practices, the reference rate by the RBI should be good enough. Okay, now I have written again, Mr. Rohit Nahata, if you have anything to connect separately, please send me a mail. I will connect with you. My team will connect with you separately. Can we start trading in Myforexeye? Yes, sir. You can certainly start trading in currencies using Myforexeye. You can use our expertise. You can use our signals. You can use our skills. You can even open a demat account. You can use us to trade. You can use us to take ideas to trade. Everything is possible. Okay. Okay. Cross border. This is done. This is done. Can I buy Forex from you for my? Yes, you can. Yes, you can. You can buy Forex from us for your friends, your family, anyone. You can do it through the app itself. Okay. Okay. Thank you, Mr. Munjal. Thank you so much. Thank you for your kind words. The presentation, we have invested quite a good amount of energy on the presentation. I hope it works out for you and you benefit out of it. That is our objective. Thank you so much for your kind words, Mr. Munjal.
We have one last question from Mr. Sanjay in the end. If you can answer that, and we can wrap up the session.
Okay, wait, ma'am. Let me just
scroll in the end. There's one last question.
Okay, towards the end. Okay.
What could be the notional figure? 65% successful trade if years of 2008, 9, and 20 are excluded.
Okay. So what could be the notional figure? 65% if years of 2009 and 20 are excluded, then it go as I 90%. Okay. Sir, I have not exactly done this, but if you ask me, if you can share me your email ID, I can do that separate analysis and reach out to you. But I could indicate that, see, there are not only 8, 9, which was uncertain. There was 13, 14 also 2 years, which were very uncertain. There was 19, 20, which was uncertain. And obviously COVID period was also uncertain. So if you exclude all that, then the success ratio can certainly go beyond 80, 85%. But if you want it separately, I will do that analysis and conclude it to you. I just took your email ID, Mr. Sanjay. So yeah, I took your email ID. My team will get in touch with you in terms of understanding and in terms of once we clip that part away and get the analysis, I will share it with you.
And Mr. Victor, I hope you have covered all questions that we shared with you in advance that were given at the time of registration. Okay, in times of registration, there were 2 questions. Should I answer that? There were just 2 questions. Please do that and then we can wrap up. Okay, right. The first question was very interesting. They had asked, what is the mix of forwards and options that I need to do for hedging my Forex risk? Okay,
So I am sure the gentleman who asked would know about what options are. Options are a slightly more complex, products to understand and execute. There is no right mix. Uh, understand options come with a cost. Okay, so how much cost you are willing to pay to hedge your forex risk is one question that you need to ask yourself. But generally what I have seen is, and generally what I've seen smart and good treasuries do is, uh, out of total 100%, 50% are done through forwards, 25% are done through options, and 25% are kept open. Okay, so this is a broad number I am giving. It is not a Bible or it is not a thumb rule, but this is the broad number that I have seen a lot of good treasuries and smart guys who work on forex markets have a number. So that is just a thumb rule. You can apply this rule to yourself or anything that you want to discuss. Again, you have asked a very intelligent question, so I would want to connect with you separately. So if you could send a mail to my mail ID, I will connect with you offline and discuss in detail as well.
We even have Mr. Vijay Kumar who has raised his hands. If you would like to ask a question.
Yeah, Mr. Vijay Kumar, kindly come forward and ask your question. You are unmuted. Mr. Vijay Kumar, if you are there, kindly ask your question.
Yeah, I'm there, sir. I'm there. Hello.
Yeah, please, we can hear you. Carry on.
Yeah, my bank is charging. See, I understand from your this session. I understand that these margins are for USD only. So whether the margin depends on currencies. Even we have some 1 lakh, 2 lakh NOK, DKK remittance. For them also, they are charging the same margin, 15 paise. Is that right?
See, sir, margin will come in whenever you want to do a conversion. Okay,
Yeah.
whether it is dollar or euro or SEK or Swiss franc, whatever currency is there, the margin will always be there. Okay, so the only difference could be that if the amounts are small, the margins will be larger. If the amounts are big, the margins will be smaller. Okay, but as a smart forex guy, what you should do is you should ensure that the margin is fixed and it is the same or slightly different for different currencies. It should not be like 5 paisa for one currency and 20 paisa for another currency. It should
No,
not
sir.
be like that.
No, sir. They are fixed for 15 paise for all currencies, irrespective of the currency. They have fixed 15 paise. Is that right, or each and every currency I have to convert into USD and I have to check?
So if it is 15 paisa and it is standard for all, then it is fine. But
Okay.
I would need to ask, sir, how much is your total exports per annum?
It would be 30 crores.
Okay, so 30 crores, I'll just use my formula that I told you. 30 crores will be close to around 4 million, right?
Yeah.
4 to 4.5 million. Okay, so let's take it as 4.5 million. So 4.5 million and 15 paisa, you can understand what is the cost that you have.
Okay.
Okay, so 4.5 million into 0.15. So almost 7 lakh rupees you are giving only for conversion.
Yeah.
So now you got the number in your mind. Now you can negotiate what that margin should be.
Okay. Okay. Fine.
Got it?
Yeah. Yeah. Thank you.
Achha, welcome. I hope that adds value to you.
Yeah. Really. Thank you.
So with this, I think we should wrap up today's session. And Mr. Victor, you had been really very enlightening to us as SCPC, and of course must be to the services exporters also. All your suggestions on how we can receive maximum premiums for our forwards and difference between traded rate, reference rate had been very enlightening to us. I'm really thankful that we got in touch with you and could arrange this webinar, this masterclass for our members. And I hope they're going to get in connect with you directly also and solve all their further queries and log into your app also. And to our members, I request them to join tomorrow also for the cross-border payment session, which will help you handle all your bank queries also. Some of them are the banking part, some are the forex management part. And after this successful session, I'd like to see you tomorrow also to handle your banking questions and get a detailed information on that. So thank you, Mr. Victor, and thank you, Arvind ji, for making it happen, and Myforex helping
Thank
us
you.
out in arranging this. And we perhaps will be launching a newsletter with them also to let you have some updates at a faster rate. So we'll be getting back to all members about that later on. But thank you so much for an excellent and a wonderful presentation.
Thank you, ma'am. Thank you. Thank you for the kind
Okay.
words. Thank you so
Thank you
much.
so much.
Thank you, Dr.
Thank
Ko.
you.
Thank you.